Good morning and welcome to the market forecast. It is Friday. Happy Friday, everyone. It's May the 7th. My name is John Hoagland. Thanks for trusting me with your time. I want to thank Dan for taking the forecast for me yesterday. I know I leave you in the best of hands when I have to take a little bit of time. Glad to be back with you today. As always, we're going to be looking for some sort of consistent context and risk management and patience, which is going to be a little bit tough this morning. Market's already on the move as the 7:30 unemployment number came out as a bit of a shocker. They were looking for a consensus of 5.8%, which would have been a 10%, 10 tenth of a percent drop, and it came out actually 6.1, so considerably worse than they were expecting. The non-farm payrolls were looking for a consensus of 978,000 added jobs. It came out 266, so some bad job numbers coming out here this morning. Markets moving already, and we're going to be looking for some opportunities here as the day goes on. As far as other news is concerned, the Fed has warned that high asset prices, a side effect of massive stimulus, are beginning to pose increasing threats to the financial system as asset prices may be vulnerable to significant declines should risk appetites fall. Now, we're not necessarily seeing that this morning. The U.S. equities markets were mostly higher before the unemployment number came out, and Nasdaq has gone to the upside. S&Ps have remained pretty much where they were when it came out, but the Dow and the Russell took a little bit of a nosedive, and it looks like they're getting ready to open lower. We're going to see some of that on the charts here very shortly. So stock indexes are set to open now mixed after the unemployment release, and crude prices continue to stumble at key resistance levels. We're looking at a potential bull flag on the daily chart. We're going to take a look at that shortly, and it is good to be back with everybody today. I want to say good morning to everybody. I saw the early Brian first in the room. You win the prize. Bill, good morning. Theo, Ed, Caesar, Norma. Where can I find the economic calendar time when I need to be flat? Since the new coach has been implemented, I can't find it anymore. Well, I've got a link for you right here. I just put it in the live chat room. That should help you. Let me know if that does not work for you. Jason, good morning. Sunil, Murph, good morning. James, PD Legend, good to see you. Mike Magallanes, the chef is in the room. Vici, good to see you. Greg, Trading Research, good morning, and it's good to be back. Thank you, Trading Research. Greg, good morning. Keith, good morning. Colin, Brad, I like that name, Brad Generous. That's a really good name. Prophet Eon, good to see you. Nicholas, it's good to be back. Vici, thank you. Vince, Lamus, Greg, Yellen Fed report, big jobs missed, but yes, still up. Seems odd to me. Well, it's kind of like the EIA on Wednesday. We had a big drop in crude stocks, and pretty much crude's been going lower ever since. Sometimes the fundamentals don't give us the information we are really looking for. Make sure you trade what you see today, and always context, risk management. I don't even think about taking a trade unless I can recognize at least 2-to-1 reward over risk. That's just me. Good morning, George. Good morning, Richie. Happy Friday to everybody. Yes. Taking a brief look at the VIX, the dollar index, and the 10-year yield this morning, just a few minutes ago. VIX actually down 18.11. Dollar index took a nosedive after the unemployment numbers, down at 90.47, and the 10-year yield actually taking a bit of a dip as well, down to 1.5%. We see the 10-year really finding a decent move to the upside on that drop in yields. I am having a little bit of difficulty with the charts this morning. I'm going to make sure and bring those up here just before we move on to those. The one thing I want to mention is I am going to be out next week. At least that's the plan. Sometimes as they say, the best laid plans of mice and men often go astray. But I am scheduled to be off next week. Dan, the man, the legend, will be covering for me, hopefully, and know that I'll be putting you in the finest of hands as he is the younger, better looking, and smarter of the two of us. So let me get the charts up here. I know I'm going to be missing all of you and probably missing the markets a little bit if my plans do go as played out, but we're going to have to see. All right, so let me get this and get them up here, and we will move on to the charts. I'll be watching to see if they disappear on us, and I do apologize about that. Just once in a while, this program just likes to do that to me and to us. So take a look now at the 30-minute or the daily in crude oil. Upside market state, upside kind of medium time frame market state, I'm going to go with. It still remains. I mean, we're still putting in higher highs and higher lows. Open interest indicates new downside bets came into the marketplace yesterday. A little bit lower volume, but we added 10,000 in open interest. I'm not really concerned about breaking this market state until we can take out this trend line down here, and then a major market state break would be, of course, weekly kickoff low, which is 61.50. I don't see that there's much risk of that happening today. So again, the market is kind of trading against fundamental information. Tuesday night, and Wednesday we had a pretty substantial drop in crude stocks, which means that the price should be going higher. So I'm kind of looking forward to seeing a possible area. If I haven't found it yet, but I'm looking for an area to buy a weakness here. If it takes going all the way down to that trend line, that's what it's going to take. So I'm going to stay very patient. Taking a look at, here we go. So the numbers, the unemployment numbers coming out and taking us, this is what I would start to call perhaps a bull flag. If we can take out the high of this trend line here, which isn't in the right place here. Let me put that back in the right spot. So if this were in the right spot, if we can take out this trend line, I think we could see a good, move back up to weekly kickoff high, which is 65.50, or even points higher. We're testing the low of it now. We're also testing a previous weekly kickoff 64 even level. And there's plenty of targets down below here. We've got a kind of a naked point of control down here. Let's call that 63.65. And then even points lower than that. I mean, there's naked points of control all over the place down below this market. So if we are going to be eyeballing those, and if traders are looking to those, they tend to bring price to that level. So we've got an interesting spot here. Market opening doesn't look like necessarily the opening range is the high of the session, but we have been one-time framing lower now for about 1.5 to 2 hours. I don't want to try and fight this move. If the downside is going to continue, we'll need to find ways to get into it. If we can't accept below this level and below this trend line, then I see the market continuing to push up higher. Did we close the gap? Doesn't look like we closed the gap. Maybe just about to the tick. Looks like maybe we did. So that gap right now presenting as resistance. So one of my main hypotheses this morning was to see if we can find acceptance above this trend line and go with acceptance above that trend line. The opposite is happening. We find acceptance below this trend line or this previous weekly kickoff level. We're going to want to go with it, at least initially. Again, acceptance is subjective. What is subjective? Is it time? Is it volume? Is it momentum? Right now, the momentum is looking towards the downside. But again, we've got some work to do down here in finding true acceptance below this level. Into the E-mini S&Ps, we've still got our charts up, so we're looking good so far. S&Ps, just the resiliency in these markets just never ceases to amaze me. The grind higher seems to want to continue. We've got, there goes the charts. Bless it. All right, give me 1 second. And we are back. Okay. So resiliency, upside structure certainly remains. Grind higher. Looks like it wants to continue. Open interest and volume good on an up day yesterday. Higher volume than the previous day. Adding 8,400 in open interest. Not a tremendous level, but now we've taken and given ourselves a new all-time high in the overnight session. As we know, that tends not to remain for very long. 3 weeks consolidation here. Is that enough to even out inventories to bring new business, new buyers in the continuation to the upside? It very well might be. And this pink line here is last week's high. We saw what happened when we kind of accepted below last week's low. We had a pretty decent move to the downside. Upon acceptance above last week's high in the regular trading hour session, we may see another move in that direction. Now, again, we've got some new information in the marketplace. Unemployment numbers unemployment not doing as well as expected. We're going to have to see how this plays out. Take a look at the 30, and we'll see if we can find some clues as to where to look this morning. Okay, pretty decent upside move yesterday. Last week's high, all-time high. I'm going to go real on this 42.11, the all-time high that we put in last week. It was the opening range high of the day. We pushed back down to the downside. We've been largely consolidating ever since. If we have reconciled our inventory, there's nothing that says this market can't get high, can't continue to move higher. It looks like right now we are going to be probably opening with a gap. Acceptance above last week's high puts in a new leg to the upside. Again, acceptance is subjective. Is it time? Time to me marks acceptance of price. If we spend some time up here, that may mean that the market is primed for a new move to the upside. If we can't get up there and we can't spend some time up there, do we have some overnight longs? Maybe not. I'm not looking at that as a factor this morning. So if we open with the opening range and it's the low of the day and we drive above last week's high and we take out the overnight high that we just put in, as the unemployment numbers came out, just kind of a knee-jerk in both directions here. Nothing real directional coming from the S&Ps since then. So if we open with a gap, leave the opening gap the low of the session, and start to show acceptance, I'm going to go with that. If we can't get up there, if we, let's say, leave the opening range the high of the session and move back into range from yesterday, I'm going to look for, we have a late spike here. Okay, this late spike, the base of it is really kind of down here at, let's just say 41.80, just loosely. Everything in futures is more of a zone than a finite number. So I'm not going to be thinking anything about looking for downside unless we can accept inside a value from yesterday, which might push us back down to value low from yesterday, again, at some point in the session. All right. So we've got some pretty decent possibilities, some pretty decent profit opportunity here for us. We've got to just try and play it the right way here. Into the Nasdaq, same but different. A little bit more of a pullback here in the Nasdaq, where the S&Ps have just been consolidating in this area. We had a decent pullback down to this trend line. No acceptance in the daytime frame below that trend line. Back up above weekly kickoff low. Seems supportive in the overnight. Oh, hang on. We just lost him again. This makes me crazy. I did the restart and everything, and it does not seem to be working for me today, but we will get that. We'll get through this. So, open interest yesterday on this move back above, or at least this hold above this trend line, was moot. It was just a kind of an empty rally yesterday as far as adding positions. Lacey is saying good morning, everyone. Obviously, in the overnight and so far today, it looks like we're going to reaccept above weekly kickoff low. back to last week's session low, all session, extended trading hour session low. This is going to be an interesting spot for us. If we can get acceptance back in last week's range, I see that as pushing us back to weekly kickoff high, perhaps even to last week's high. Take a look at the 30-minute chart. All right. So here's weekly kickoff low 13.5. No, that's not it. That's a previous. That's the previous 13. It's just a previous level. So here's what happened after the unemployment numbers came out. The Nasdaq took a big drive to the upside, where maybe we added some new longs here. Where we couldn't bring in new longs yesterday. Technically, I don't think we truly have a late spike here, but I think the fact that it closed near its highs, I think, is a good positive for us. Not really looking at overnight inventory as a possibility, much less of a probability right now of a gap close. But if it does happen, that's going to be important information for us. So, if we can't close the gap relatively early, I'm really going to be kind of focusing on that gap close rule today. If we can't close it, I'll be looking for opportunities to buy weakness in the Nasdaq throughout the day today. Gold, wow, what a pop in the gold, man. So, I'm sure all gold traders are well aware of what happened yesterday when we took a move above last week's high. We did it a few times this week, but finally we brought in some really good volume to the upside, and we added 23,000 in open interest. So this pop and close above that weekly kickoff high is really indicative of potential continuation to the upside, and it did get some help in that regard today with the unemployment numbers that came out. So when we find a continued acceptance above this line, we're looking for a bigger move to the upside. Take a look at the 30-minute chart here before we move on to the euro. Okay, here's weekly kickoff high. We closed above it, holding above. The number comes out, drives higher. I've got some research to do before I'm looking for any more resistance here to the upside. But, as long as we can hold this area without closing the gap, I think we were going to be looking for opportunities to continue to look for trades to the long side. Doesn't mean there's no opportunity to the short side. The market is an upside, new move to the upside. If you're going to be looking for shorts, if you're going to be finding opportunities near structure levels to the downside, just try not to fall in love with those trades. Be specific and reasonable with profit targets if you're going to be looking for shorts in gold today, and see what we can find. I mean, it's going to be a kind of a tough haul to find really good trade opportunities. It's always been a challenge for me to get into markets that are already underway into a trend. The euro. Okay, we had an interesting week, and now we've lost the charts again, and we're going to get this done, I promise. So I go for 2 weeks, and then all of a sudden it just happens again, and my apologies. Okay, so the upside digestion kind of has been remaining now. We had a really big pop after that unemployment number that took us up near last week's high. We broke upside structure. We've been in a kind of an upside digestion area here. I believe that taking out and accepting above last week's high brings us back into a continuation of the upside move. Had a pretty good move off the low yesterday. Not great volume, but we added 8,000 in open interest. So this pop off this low back above last week's low, no check of this week's weekly kickoff low, says, yeah, this is not a hollow pop here. This kind of was indicating buyers have come back into this market after this digestion, and the reconciling of the inventory in this area of congestion here may be just enough to continue this move to the upside. We've got a previous weekly kickoff level that was in play before the unemployment number came out. This might be an actually decent spot to look for an opportunity to buy weakness in this market if that's part of your hypothesis. 2060, 120.60. And so, I'm sorry, 120.90. 120.90. This was the area we were talking about, and then the news came out, and then it bopped right up through it. So we did open with a gap. We barely left the opening range at the low of the session. I think we took one tick look down below it. Then the numbers came out, and it just really ran to the upside. So this is last week's high. Remember, if we accept above that, that might create a new upside leg. Look at the 10-year. Now, just kind of looking at what might be ahead of us if we do accept this morning. Even before the number came out, I said, okay, this 133.17 area looks like it's primed for a check and possible resistance. The market popped right up there and has now come off. I'm not sure where our opportunities lie in this market now. Of course, if this is going to remain supportive, it's a pretty loose area. This previous weekly kickoff level actually is what this is. It is still important if we're going to find support there. Take a look at the 30-minute chart. Quite the pop. Going to be hard to get this all on one screen. So settlement was down here 132.21 and a half. This 132.19 was a previous weekly kickoff level. I think this is what we were looking at on the daily chart. And boy, that number came out and it just popped, and the yield also took a tumble. It's been kind of holding right around that 1.6%. It dove down actually below 1.5% for just a short period of time this morning. So interesting things in the markets. It is Friday. Let's make sure that we try and finish the week strong. One thing is for sure, if I've had a good week, I don't want to wreck it today. I'm going to see if I can't make a little bit of money and call it an early weekend. Again, I do want to thank Dan for covering for me yesterday and for looking and for covering me into next week. We'll see how that plays out. Lacey was joining the stream today. She always likes to say hello to everybody as well. And Vince, still upset from yesterday. Tried getting long gold during the 8:30 to 9 to 9:30 Eastern time 30-minute bars yesterday. Got stopped on them both, and it rallied over $20. Yeah, that move to the upside yesterday, I'm thinking, although I wasn't involved in it and wasn't watching, I was thinking it was probably a little bit of low liquidity. I'm not quite sure when and how it happened. But yeah, that does happen. It happens to everybody, Vince. And we just have to take everything that we do, everything that happens in these markets, and try and learn something from them. If there's anything I can suggest is take a look back at it, take a look at what you were thinking, take a look at what you were feeling, and always be kind of thinking, okay, well, this is what happened. I couldn't control it, but was there anything that I could have done that may have brought forth a better outcome for myself? When there's like this morning in the when the unemployment numbers came out, gold, euro, I mean the markets, even the S&Ps were very illiquid, and when they're illiquid, there's fewer bids, fewer offers to absorb when things start to come in and people start moving product around, and those kind of instant changes in volatility also decrease liquidity. So the market goes a little bit further. It's so difficult to we don't know what exactly is going to happen and what to do. So just take it as a something to learn from. Don't get upset. Don't harbor venom. Those who harbor venom, it's like you know taking poison yourself and hoping the other person gets sick. It doesn't do anybody any good. Learn something from it, Vince. I know it's hard to take sometimes. It happens to even professionals. It happens to me. I miss moves. Sometimes, if you want to call a stop misplaced, this is where you think that the market is telling you you're wrong. And is it misplaced? Maybe not. Always something to learn from it, though. Okay. Doesn't help that they're missed out on the rally over the $20 rally. That's a substantial move, but we're not going to catch them all, and there will be more opportunities to come. Vince, hopefully, maybe you got something going on today in gold. What's the elevator story on the fretboard on the wall, PD? I have a deck on the back of my house. We have a lot of parties there, and it's kind of surrounded by trees. And so I get like old beat up guitars, and I hang them in the trees for the summer. And people are always like, "Why are there guitars in your trees?" And I say, "Well, that's where they live. Some of them are migratory. Some of them stay all winter, but that's where they live. Be careful, because a couple of them kind of bite." And this was one that was out there for, I don't know, a year or so. And all of a sudden I noticed the fretboard kind of loosening up. So I just kind of cleaned it up and thought it was kind of interesting on the board behind me. So, Lamus, don't reset 5 times. Trade smaller. If you're lost behind yourself, trying to stand up today and make it another day, sometimes it's even better just to take a day off. The first thing I want to kind of mention is, please don't harbor any anger or venom. Hanging on to venom or anger only hurts you. It only hurts you. Don't do it. No, I'm certainly crazy, PD legend. Certainly crazy. Yeah, just slow down when things get crazy and things just don't go your way, and we start to get angry and we start to kind of go with revenge trading. It doesn't do anybody any favor, any good to get worse and worse into that. Dad always said, when you're mad at a group of people, half the people you're mad at don't even know you're mad at them, and the other half don't care. Believe me, the market doesn't know you're mad at it. The only person it's going to affect is you. Okay. Yeah, there's some really good trees back there. It's very private, and we play a lot of music out there and have a lot of fun. So, all right, I've yammered on too much. I'll miss you all next week. No group coaching next week. We'll pick that up again the following week. Should something happen, there is a chance I might be here with you. But otherwise, I'm looking forward to seeing Dan. Looking forward to seeing all of you when I get back. I know I'll miss you. Hopefully you won't miss me too much. And take your deep breath. Humble, grateful, and creative in your trading today. Get out there and profit. Trade well. And I'll see you in a week.